We're Team PLC, and what I'm going to cover here is who we are, why we listed, what's our track record, what we will achieve, and what is basically exciting us. We're very excited about the change that's happening within the wealth management industry. What we particularly like is that change is growth, and more specifically, it's structural rather than cyclical growth. So on the following slide, what we identified is that the timing was great for establishing a new wealth management or asset management business that happened to be based in Jersey. And what we're looking to do is act as a consolidator in what is a very highly fragmented industry below some of the better known names. We think that Brexit, I mean, it's interesting, the last question for the previous presenter was on Brexit. We actually think that Brexit and the possible prospect of higher taxation in the UK, combined with lower interest rates for longer, has sort of focused investors and savers' attention. There are a number of other dynamics going on, which we'll come to, but what today we have is a business that's set up to deliver market-leading services to clients. We've got some great third-party service providers, such as Pershing, which belongs to BNY Mellon. So our client assets sit alongside $40 trillion worth of other people's assets. We have a capital-light model, and we have a team that is backed by some very experienced and long-term investors. As the following slide exclaims, times are changing, and we are in the foothills of what will be the largest intergenerational transfer of wealth history's ever seen. The European Central Bank recently approximated that 50% of all of Europe's wealth is currently controlled by over 55-year-olds, and that's over 9 trillion sterling. The other observation that is made is that 90% of beneficiaries change their wealth advisor when they inherit. There are some other structural changes and secular changes, and I haven't even touched on Asia or Southeast Asia in particular, where the accelerating number of high net worth individuals is growing, and they are looking for investment management, wealth management services. Within these trends, you'll see from the next slide that I've just picked out two really that particularly sort of get me in a positive mode, and that is gender relevance. The Boston Consulting Group recently estimated that 32% of the world's wealth was actually controlled by women, and that wealth was adding roughly about 5 trillion per year. In the UK, 46% of millionaires residing in the UK are actually women. And I'm not convinced that the existing established players are that gender accessible. The other aspect is what I call the Amazon-fying sort of aspect of financial services. And this is the connection of digital platforms, and today is a very good example of that, or between private clients, high net worth individuals, and financial markets. And I can see no other, I can't see that changing. I can only see that accelerating. And now our ambition is not to be a platform. Our ambition is to be on platforms and for platforms to be effectively a distribution channel for us. I mean, AJ Bell is a very good example of this, in that, you know, they were one of the early pioneers of this combination of digitization, if you like, and the ability for the markets to be very accessible. In the States, we've seen it with the Robin Hood movements, if you like, the democratization of financial markets. We decided to list on AIM basically because it enabled us to attract new shareholders, and in actual fact, it didn't work like that. I have been close to Schroders for a very long time, and Schroders agreed to back us in this new initiative. So in actual fact, we didn't make that many calls, but what it's done is that it's given us an acquisition currency. It gives us this long-term capital. It promotes incentivization, which helps us with things like team lifts, recruitment, and it's raised the public awareness of us. And that's been evidenced by the number of inward calls that I've received, and Matthew, my CFO, has received since the listing in March. The other thing I would say is that outward going calls from us are taken a lot more seriously now that we're a PLC. So as the following slide shows, that we're new to the market. The IPO was early March. We raised 7.5 million. That was significantly more than we originally targeted. We were looking for between 3.5 and 5.5. That money was raised on a very limited marketing program. We didn't really go out to many people. It was more friends and family, former business associates, and former business partners, in fact. So we've ended up with a fantastic shareholder list. I mean, I invested £280,000 at 88p. We've got a range of shareholders, which you'll see from the next slide, includes Andy Brough at Schroders, Giles and Guy at Hargreave Hale. You know, these guys don't buy 10% of a 14.5 million market cap company unless they've got reasonable line of sight and confidence that they're going to see growth. But below that box of shareholders, we've got some really quite interesting individuals. For example, John Drinkwater, formerly Goldman Sachs, then Kelso Place, Clive Roberts, First Derivatives, Martin Gilbert, founder and chairman of Aberdeen Asset Management, and the list goes on. So a question I would ask if I was in the audience is, okay, so fine, what's your track record? So the next slide gives you the board level in terms of experience. I've spent most of my time as an investment banker, more latterly at Altium. That was a startup. There were 6 of us to start with. Over the following 14 years, we grew it out. We had offices in 14 different cities around the world, 240 staff, and it got sold to another financial services business, actually out of the States. Matthew's track record is superb and very applicable to what we're doing. I think the thing that is most relevant here is his experience at Close, where he was CFO/COO of Close Wealth and Close Asset Management. But then he was at Ascot Lloyd for just over 4 years, where he was majorly responsible for that business going from broadly EBITDA break even, small loss making, to EBITDA of 70 million. In the non-execs, you know, Philip was chairman of Coots Offshore. David was on the executive committee of Salomons International. Michael was CEO of overseas lending for NatWest International. and then RBS. Michael also sits on the board of JTC, one of the largest market capitalized trust and administration services businesses. So we started off in January 2020, next slide please, January 2020 with the acquisition of Theta Enhanced Asset Management, which was a 20, or then it was a 19-year-old Jersey business, bit of a lifestyle business with AUM at the time of around about 140 million. Theta Enhanced Asset Management gives you team. As you'll see from the next slide, as of the end of March, we've grown the AUM to 286 million, and that's all been organic. We haven't made an acquisition. So what's the market opportunity? From the next slide. Well, the market opportunity is vast, absolutely vast. Wealth management, asset management, however you want to call it, is hugely important to vast numbers of people. And again, today's event is evidence of that. Another aspect is the move by the developed economies, and for that matter, some of the emerging economies, towards self-reliance, what I call self-reliance, combined with extended life expectancy. Again, I'm sure all of you on the call are on the call because of these factors. Locally, Jersey is a financial center. It's got, estimated by the Jersey Finance Department, over 600 billion of private wealth is here in Jersey. But you know, the wealth management industry globally is vast, and it's growing, and it grows partly because AUMs grow as a function of market growth. I think the average per annum growth of the S&P 500 going back to its beginnings is, I think, around about 8% per annum. So when you've got markets growing on average, you know, these high single digits, AUM grows. Offshore is, or financial center jurisdictions such as Jersey, Guernsey, Isle of Man, Mauritius, Singapore, Hong Kong, they're all still quite fragmented, even though they're large. In terms of the UK is a lot more mature, but there's still fragmentation emerging. And I think that's partly because of the beginnings of this generational shift and also the move to digital. So what we are looking at Team is to be multi-channel, so non-reliant on one specific channel. And a good example of this would be our exposure to the expat community in places like southern Spain, Portugal, the Balearics, where we see inward bound AUM coming from intermediaries such as Sovereign Group. So what are we looking to achieve? Well, what we're looking to achieve is, over and above all, delivering shareholder value creation. So how are we going to do that? We're going to do that through a mix of complementary organic and acquisition-led growth. And we're looking at multiple jurisdictions. We have a very strong pipeline indeed. That pipeline grows and has grown as part and parcel of the raised public perception from the listing, and also the fact that we now have acquisition currency. Vendors of business don't necessarily want all cash. They want to be able to estate plan, they want to participate in the growth of a larger business. So we will grow because there are revenue and cost synergies that will come out of those acquisitions as we add scale. We're looking to grow also through complementary services. So that could be specialist funds, it could be cash management. The great thing is that we don't have any legacy issues, either in operations or reputationally. Operationally, we're extremely efficient, and Matthew, my CFO, COO, is a past master with deep experiences in putting together models that deliver this over and above return. So in summary, we are a new company to the stock market, but within the business, you've got a lot of grey hairs, you've got a lot of experience, and you've got a lot of dynamism and entrepreneurialism. Now is a great opportunity to be an early investor alongside some industry leading experienced shareholders, fellow shareholders, in the growth of a business. And it's the law of small numbers. It's a lot easier for us to double and then double again and then double again, because we're starting from a lower number. We're very excited. Our investors are very excited and very supportive. I know I've cantered through that, but I wanted to leave a lot more time for questions, because I always think you get to understand a business a lot better from asking questions and listening to the answers. So thank you.
You were saying that you got planned acquisitions in the pipeline. Have you got any sort of time frame since the listing in March?
Chris, I wish I could answer that question more accurately, but being listed has lots of advantages, but one disadvantage is you can't actually talk about things that you might be involved in that may or may not happen. All I would say to you is that, you know, the list of acquisition prospects that we presented to, you know, the likes of Andy and Giles and Guy were enough for them to have confidence that we would be delivering on that strategy. We made an initial sort of shot at Tavistock. That's in the public domain. We didn't actually make an offer. What we were doing was trying to persuade the board to open the books up, because the public domain information on that company, i.e. its report and accounts, was somewhat opaque. And so the board clearly felt that they didn't want to open the books up. I have some views on that, but it's probably best not to express them. But that demonstrates our agility, that so soon after IPOing, we were ready. We can move very quickly. We have great advisors, but we're not going to overpay, which I think shareholders, you know, I invested 280,000 of my own money, and I own 20.25% of the business. So I'm not going to overpay.
Okay. All right.
But yeah, I mean, there's plenty. I wish I could tell you more, but I can't.
No, of course. What is the minimum investment?
For a client or for a shareholder?
Shareholder.
Sorry, I missed the answer.
A shareholder.
Oh, you can buy one share if you want. So stock exchange, you know, it's traded on the London Stock Exchange.
Yeah.
I mean, the free float. I mean, I would add that the original shareholders in the business, so the private business, are locked in for 12 months, and I'm locked in for 2 years, hard. So and you know, Andy's not about to sell any shares, Giles and Guy are not about to sell any shares. So the reality is that the free float, which is maybe a bit of a reason for, you know, the recent sort of, you know, drifting of the share price, you know, absence of news, small sellers, but there's no minimum. You can buy one share. I think you struggle to buy 1 million.
Okay. So another question we've got here. How can you make yourself attractive to investors in a competitive sector? Driving down fees, ? What is your strategy?
The strategy goes back to the law of small numbers. You know, it's a lot harder for a £2 billion business to become a £4 billion business than it is for a 14 million market cap business to become 140 million. I don't think we start to hit any size ceilings until we get in the, you know, above 250 million. And you know, remember that it's about, you know, it's about stages. you know, get to 500 million, get to 1 billion. Then 1 billion means that you can start to buy something that's got 2 billion under management. You know, get to 4 billion means you start to be able to buy something that's got 4 or more billion under management. And you know, we're in quite a sweet spot at the moment, because there's another dynamic going on in the market, and that is a lot of the large traditional banks, particularly the continental ones, are withdrawing from their satellite operations. You know, for example, UBS have pulled out of Monaco.
Mm-hmm.
You know, Lloyd's not interested. So yes, you've got the Rathbones, the Quilters, the Bruins, but their ability to double in size, you know, other than merging, is difficult. And I would argue that these older businesses are encumbered with legacy issues, not least operational. The other thing, I keep going back to it though, is this massive intergenerational wealth transfer. You know, the guys and girls that are going to inherit this wealth over the next 20, 30 years, they have different preferences. They have different views on how that wealth should be managed. And, you know, I said 90% of beneficiaries change their advisor. I've already seen this in our Jersey business. And I think that I think one of the things that digitization and the platforms like the one we're on today, and the great work that AJ Bell have done alongside others, is that it's made it easier for people like us to access people interested in the way we manage money.
Okay.
And you know, it's very easy to cross border.
Yeah. Okay. Thank you. Is there any broker notes and forecasts available to retail shareholders?
We've just come out of that blackout period. And I know that Matthew has been talking to some of the sell side analysts, and so I think that there will be something coming out at some point. We've got our AGM tomorrow and our interims, both of which are a bit of a non-event, so soon after the listing. I think that a broker's note right now probably doesn't have a huge amount of value. A broker's note on our first acquisition will have value. You know, I think what Matthew's been doing is prepping the analysts with all the background and, you know, all of that stuff ready for when we have something that we can announce, and boom, they can go out with their notes. But, you know, I'm really excited. I mean, you know, the opportunities around the place, you know, look, for example, and by the way, this isn't inside information, and I'm not making any suggestion that we might do this, but, you know, for example, you know, SocGen have put up Kleinwort Hambros for sale unofficially. Now, Kleinwort Hambros has got 14 billion under management. It's a very old name. It's actually, the Hambros side started in Jersey. You know, then you've got the dismantling of Davy in Dublin. You know, that's up for sale and being dismantled. I mean, everywhere you look, there are businesses that are being challenged, and there are either total businesses to buy or there's fragments.